Kotak Nifty Midcap 150 Momentum 50 Index Fund. Will investing in this fund that combines the potential of midcaps with the power of momentum investing helpful for our investment portfolio, or is it even the right fit for investment portfolio? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. But before analyzing whether investing in this fund will be helpful for our investment portfolio or not, let us first understand what is Kotak Nifty Midcap 150 Momentum 50 Index Fund is. So as an NFO, it opens on 19 September 2024 and closes on 3rd October 2024. And some of the key features of this fund is it is an open-ended fund type and it belongs to the category of equity midcap, and it has Nifty Midcap 150 Moment 50 TRI as its benchmark index, and there is no exit load as well as entry load, and the minimum investment amount you need to start investing in this fund is just 100 rupees, and the fund managers for this fund are Mr. Devendra Singhal and Mr. Satish Dondapatti and Mr. Abhishek Bisan. And according to the riskometer, the risk involved in this fund is very high. Now if you take a look at the primary investment objective of this fund, that is to provide returns to the investors that before expenses closely correspond to the total returns of the securities as represented by the underlying index, but as the index fund it is subjected to tracking error as well. Now let us take a look at the index this fund is representing. So Nifty Midcap 150 Momentum 50 Index aims to track the performance of the top 50 companies within the Nifty Midcap 150 selected based on the normalized momentum score. So the normalized momentum score for each company is determined based on its 6-month and 12-month price return, which is adjusted for volatility, and the stock weights are based on a combination of the stock's normalized momentum score and its free float market capitalization method. And this index can be used for a variety of purposes such as benchmarking, creation of index funds, ETFs and other structured products. And the sectors represented under this index are the capital goods sector, financial services, realty, consumer durables, healthcare, power, oil, gas and consumable fuels, metals and mining, automobile and auto components, telecommunication, construction, chemicals, IT services. And the highest weightage is given to the capital goods sector by a weightage of 19.59%, while the least weightage is given to the services sector by a weightage of 1.28%. And now if you take a look at the top 10 holdings of this index, which is the top 10 companies, they are Dixon Technologies India Limited, Cummins India Limited, Oil India Limited, Bharat Heavy Electricals Limited, Lupin Limited, BSE Limited, PB Fintech Limited, Indus Towers Limited, Rail Vikas Nigam Limited, Voltas Limited. And the top first position is given to the Dixon Technologies India Limited by a weightage of 4.79%, while the top 10th position is given to the Voltas Limited by a weightage of 2.99%. Now let's take a look at the index returns as on August 30, 2024. From the tabular column and the graph, we can see from the data gathered that in 1 year it has given a return of 66.13%, and in 5 years it has given a return of 39.93%, and since inception it has given a return of 25.39%. And if you closely take a look at the graph, you can also see that in short term it does have dips, but in long term comparatively it has performed very well. Now as we have understood a few basic details about the Kotak Nifty Midcap 150 Momentum 50 Index Fund and also the index it is representing, let's move on to analyzing whether investing in this fund will be a right fit for investment portfolio or not, by analyzing the potential advantages and the disadvantages of investing in this fund. So let's start with the pros first. So one of the major advantage of this fund is the momentum investment strategy, because this fund follows a momentum investing strategy, meaning it focuses on stocks that has shown strong price performance. So it aims to capitalize on the ongoing momentum, which can lead to higher returns if the trend continues. And another advantage is the mid-cap's growth potential. Since it's based on mid-cap stocks, the fund targets companies with high growth potential. So mid-caps are typically at a stage where they have room to expand, offering better growth opportunities compared to large cap stocks. And another advantage is the systematic stock selection, where the index tracks the top 50 mid-cap stocks based on their momentum scores, ensuring a systematic and data-driven selection process. So this helps us eliminate human bias and rely on the performance metrics, which can lead to more objective investments. And finally, one of another major advantage is the diversified mid-cap exposure, because you get exposure to 50 mid-cap companies across a range of sectors, reducing the concentration risk. So even if one sector underperforms, other may still drive the fund's returns, adding a layer of diversification. So these are all the potential advantages you might get by investing in this fund. Now let's just take a look at the potential disadvantage. So one of the major potential drawback of this fund is the higher volatility. So while mid caps does have higher growth potential, they also come with higher volatility, because prices can fluctuate more than the large cap stocks, making this fund riskier, especially in times of market instability. And another potential drawback is the risk of momentum reversal. So momentum investing works great when trends continue, but if momentum reverses, these stocks can lose value quickly. So this fund is vulnerable to sharp downturns if the market suddenly shifts direction. And another disadvantage is the no active management involved. So as a passive fund, there is no actively fund manager who's making all the strategic decisions for you. So this portfolio is rebalanced based on momentum metrics. So there is no human intervention at all to manage risk during downturn period. This can be a major potential drawback for you later on. So another disadvantage is that it's limited to mid-cap stocks. So this fund's focus on mid-cap stocks means you miss out on the stability of large caps. In market downturns, mid-caps tend to be more volatile, while large caps may offer some protection. So these are also the potential drawbacks you might get by investing in this fund, which you need to carefully go through and consider before choosing to invest in this fund. So what is the final takeaway from our analysis on the Kotak Nifty Midcap 150 Momentum 50 Index Fund? Is it the right choice for you? As you can see from our analysis that if you are an investor seeking high growth potential and can handle higher volatility, this fund could be a good fit. But remember, momentum investing comes with its own set of risks. So always assess your financial goals and risk tolerance before investing in this fund or any fund. So that's why it's completely up to the investor, because it's based on the factors that determine whether investing in this will be suitable to their unique portfolio or not. But our personal opinion is, as this is still an index fund, it might be suitable for an ultra conservative investor who's not willing to invest in an actively managed fund. But even then, there are similar index funds out there in the market that has a lower expense ratio and a lower tracking error. And if you're an aggressive investor, you can also invest in actively managed funds, which have the potential to deliver higher returns than this fund compared to an index fund, because in an index fund you do not have dynamic fund allocation and it cannot outperform the index itself. But in actively managed funds, they do have dynamic fund allocation, which they change according to the market condition, and also it strives to outperform the market and give you higher returns. So if you are looking for these in your investments, it's better if you decide to invest in an actively managed fund. But if you are having a struggle deciding whether investing in this will be suitable for you or not, or you do not have the sufficient knowledge of the market, or you do not have even the time to research about it, then it's better if you consult with a professional financial planner who will be able to take a look at the suitability of the investment objective, risk profile, overlap ratio, and the allocation you need to give to the fund you choose to invest in, and see whether it all fits into your unique financial goals needs. So they will make sure that this all comes together to help you achieve your financial goals more faster and smarter. So they will make your investment journey in a simplified way, so it will be helpful for you in the future. So you can definitely choose to invest through a professional guidance as well, like consulting with a professional financial planner.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.